Hey there, welcome to another episode of The Block Crunch, the podcast where we talk to investors, entrepreneurs, and builders in the crypto space for 20 minutes every week. I'm your host, Jason Choi. And if you haven't already, please do rate and subscribe on Apple Podcasts, Spotify, and Stitcher. And also recently, we launched our YouTube channel where I'll be posting some of our video-based interviews as well as audio files of the podcast we've done so far. So if you're more of a video person or you want to see what I look like or what my interviewees look like, do go on YouTube and search for Block Crunch Podcast and be a subscriber today. And this week, I am so excited to talk to Jehan Chu, the co-founder at Kenetic Capital, a blockchain firm committed to expanding the development and adoption of blockchain platforms through investments, advisory services, community, and technology. Kenetic is so much more than just a venture firm because they also assist companies with business tokenization and advise token sales, besides making investments in cryptocurrencies and running their own trading practice. And on top of that, they also have educational efforts where they're teaching corporate partners and interested government bodies in blockchain technology, as well as offering technical development services for blockchain. Now, Jehan is also an early investor in Bitcoin, going as far back as 2013. And currently, him and the rest of the Kenetic team are based in Hong Kong, which holds a special place in my heart because it's where I was raised. So today I am doubly excited to chat with Jehan about how he's investing in decentralized applications, why he thinks Bitcoin will reach $50,000 by the end of 2018, as well as his thoughts on the future of regulation and what Asia means as an ecosystem for blockchain. So with that being said, let's buckle up and dive right in.
This is worldwide phenomenon.
First of all, Jehan, thank you very much for being on the show.
My pleasure. Thanks for having me, Jason.
So just for our listeners at home, can you tell us a little bit about yourself, what your background is, and how you fell into this crypto rabbit hole?
Sure. I'm the managing partner and co-founder of a company called Kenetic, which is a blockchain platform. I got into Bitcoin around 2013 after a couple different stints, first as a front-end developer in New York during the first dot-com boom, and then a second kind of lifetime as an art dealer. After having worked at Sotheby's, I started working with ultra-high net worth individuals and corporates building art collections. But during that time, I got interested in Bitcoin on a personal level, really fascinated by the idea of proof of existence, as explained by a professor at the time, whose name was Jerry Brito. And I got really interested in the application side of it. That led me to the Ethereum kind of framework, which by this time the white paper had just been released. So I started the Bitcoin Association of Hong Kong with a number of guys here in Hong Kong. And then I was really interested in Ethereum specifically, so I started the Ethereum meetup. And my first meetup had 5 people in a dark bar in a place called Shengwan. And, you know, as we all kind of know, the space has exploded in interest and engagement. And now I have nearly 2,000 members in my meetup. I also run the Hyperledger meetup, and I continue to kind of really stay engaged with the community. On the professional side, Kenetic is a blockchain platform. We focus on technology, so building smart contracts, doing smart contract audits and applications. We focus on tokenization advisory, so working with early, middle, and late stage companies to understand the opportunities of tokenization. And in some cases, that means doing an ICO, and we can do that too, full stack. We also have an asset management arm, so we invest through various types of strategies, trading strategies, long strategies, and both equity and tokens. And then finally, I think the most important thing is we have a community arm. And with that community arm, which is recently launched and will be led by a guy named Sam Gelman, who was one of the earliest Uber employees and really established Uber in Asia, we're looking at drawing together all the different threads of community and its levers, whether it's a meetup, whether it's a conference, whether it's a Telegram group, and bringing it together and trying to push education and awareness in a sustainable economic way. So that's Kenetic in a nutshell. And we've also recently announced a JV with a company called Tora to build what we think is the institutional solution for trading crypto. So it's a platform which trades across all exchanges.
That's amazing. So that sounds like as if Kenetic has a lot of different branches. Would you say that's what sets it aside from other existing, say, hedge funds or venture capital firms that focus on crypto out there?
I think that breadth and scope is one thing that differentiates us, but I think more importantly, I hope that it's our experience and longevity and long-term commitment to the blockchain space, which gives us a slightly different perspective. That's why I have such an emphasis on actually community, which might be slightly different to the way that other investors look at it. I believe in sustainable systems because I think it's the best type of business. I think that as we extract value through some of these more traditional arms, an investing arm, etc. I think it's really important to reinsert value back into the community and back into the ecosystem through education, through support, and that's it's almost like we're designing a crypto economic system, like a token economy, without the actual tokens, but with the same concepts: give, take, give, take. And to that end, actually, my wife and I started something called Social Alpha Foundation. My wife is Nydia Zhang, and she's the chairman and co-founder. And Social Alpha is actually a grant-making foundation. So no investments, no profits. We simply raise money from our friends who have done well in the crypto space, and we redeploy that capital to projects that are using blockchain for social impact.
Mm-hmm. And is that only within Asia or Hong Kong?
No, all of our activities, whether it's Kenetic or Social Alpha, are global.
Got it. And that's actually another aspect I wanted to focus on later as well, especially because Hong Kong has a special place in my heart, being the place where I was raised. But before that, I'd like to bring up an interview you did with Bloomberg, more in the investment side. So you spoke on Bloomberg before and set a target for Bitcoin at $50,000 by the end of 2018. And I'm curious, how did you as an investor arrive at that target, and has it been revised since, especially given how recently, as all of the crypto enthusiasts would have noticed, we have been in a bear market for quite a while now.
Sure, I absolutely stand by that forecast. I think that if you look at the kind of institutional involvement and the amount of institutional money that is in the space, it's really nothing. It's a rounding error. The overall market cap is really minuscule, and most of that is kind of spread across Bitcoin as well as many other altcoins in terms of value. There's really nothing in this space. But when you're talking to banks, when you're talking to hedge funds, as we do a lot, and you see their interest, you see them trying to find ways, gathering information, hiring people, trying to access the tools like Caspian, which is our trading system. You see the demand for it. It's very, very clear that they are coming. And it's very, very clear that this is going to push up the kind of demand for the most fundamental assets in the space, which obviously is Bitcoin, to start with. And if you even think, let's call like Bitcoin at 10 now. I know that kind of bounces around, but if you even think that the kind of investment in the space from institutions, and I'm just talking about hedge funds, I'm not even talking about sovereigns, central banks, much less pension funds. If you just think that it's only hedge funds that will come in, it's easy to find a model which will get us to 5x the current kind of investment in the space, and especially in Bitcoin. So absolutely, I stand by it. I actually do think that it will still come by the end of 2018. I see this bear market as part of the journey. And we're going to bounce around a lot. So we'll see what happens.
For sure. And as you mentioned before, with Kenetic, you're working with a lot of companies to help tokenize their assets to launch their own blockchain projects. And I'd like to tie this back to our discussion about Asia. If you are an entrepreneur trying to launch a blockchain project or an ICO, where will you be in Asia? And alternatively, if you're an investor trying to look for the next breakout blockchain projects, where in Asia would you look?
We've been really fortunate to work with some great companies around the world who we've spoken to and who we've been able to, encourage them to set up in Asia. So, for example, one of our advisory projects is a company called Simple Token, which is really like an e-commerce ecosystem token, and led by Jason Goldberg, who was the ex-founder of Fab.com. He started off as an India/Berlin-based company. And we turned him into a Hong Kong-based company. And the reason for that was actually not only for the tax purposes, but also for the overall type of support and professional services that he could find in setting up and executing a token sale in the region. So we've been able to see this over and over. We also worked as the advisor for a company called Bluezell, led by Pavel Baines and Neeraj Murarka, a great company which is basically the decentralized or tokenized Oracle DB. You can think of it. It's a decentralized application database. They were set up in Singapore, and I think Singapore is also a great jurisdiction for token sales so far. So at the moment, I would say that Hong Kong and Singapore have gotten a lot more of the attention, and we've seen a really rapid rise in the number of token sales that are using them to launch their own token sales. Obviously, Japan has really kind of surged both backwards and forwards and backwards. There was the licensing of exchanges and licensing of token sales, so you could have completely regulated and completely above board token sales, regulatory clarity. But then they had the coin check hack, and so they've cooled on that. So at the moment, I would say there's no one place which is really the end-all be-all solution for token sales. It just keeps changing, and everybody in the Asian region is constantly playing kind of jurisdictional hopscotch to try and find who's good today, and how are they building infrastructure? How is the government engaging? What are the signals that we're seeing? So to that end, I would say Hong Kong, Singapore, and Japan at the moment, and then from there it's just a matter of how it all unfolds. As far as looking for investments, I think that all of these places are great. I would also throw Korea in there. I think that China still has an incredible amount of development, even if they're not token sales per se. But there's so much development and so many projects coming out of China. Not all of them are good, and I would say that perhaps actually a lot of them are quite weak. But the ones that really shine are great. So China also has great blockchain companies coming out. India, I think, is on the forefront, but really hasn't made so much of a dent. But we're starting to see different signs of life over there. And really, I think that when they do come in, it will be quite strong. We're advising a company called Nucleus Vision out of India, which is also kind of a retail blockchain solution. And we're really excited to be advising a company called Aluma, which will be an India-based kind of exchange and emerging markets exchange. So we're starting to see it all over. And I think really the takeaway is that we're hitting an inflection point where there's a critical mass of projects that are really kind of forming a base. So it's quite an exciting time in Asia.
For sure. And speaking of China, it seems like not too long ago that China just banned cryptocurrency trading. And some people might perceive China to be, apprehensive to public blockchain projects or these permissionless public blockchain projects like Bitcoin, the ones that the mass majority are interested in. So do you think this will change? Do you think China will eventually open up to just crypto in general?
Absolutely. I think that China is just setting the stage. I think what they've done is they've come across this amazing kind of fertile ground called crypto and blockchain. They found that it was overrun by weeds and some flowers, but mostly weeds, and they cleared it. They kind of basically burned it all away. And I think what that does is, to complete the analogy, it creates an even more fertile ground for them to build on and to grow the types of crops that they want. And that's classic China. They are not against technology. They just want to be able to control it. So I think many of us anticipate China coming back into the game in force, but with full regulation and full control, the same way that they've done with the internet industry generally.
Mm-hmm. Got it. And you are also based in my hometown, Hong Kong, as you've said before. So besides, of course, the tax regulation, like you mentioned before, what makes Hong Kong a special place for crypto? Why are you basing yourself in Hong Kong when all of your clients are pretty much all around Asia?
I feel really fortunate to be, in this moment of time in Hong Kong. Obviously, Hong Kong traditionally has been a trading port for Asia and really for the world, and then it has become a center for, a hub for manufacturing and trade, in the kind of industrial and kind of, earlier or, more recent ages. And then it's become a financial center of Asia and really helped to bring Asia to the forefront as far as trade, finance, and, capital markets. But it's lost that luster a bit. It's under heavy pressure from places like Shanghai, other parts of China and other markets, in Singapore especially. And I think that crypto here is really its opportunity to, reclaim its mantle as one of the centers, the really powerhouses of Asia. To that end, crypto is quite strong in Hong Kong. There's an incredible amount of community here. It tends to be obviously more financially focused and professionally focused. But what's great about blockchain, if you kind of believe that this is the next version of the internet, then it applies to all things. And what's great about Hong Kong is that it has all things. It has supply chain, it has manufacturing, roots. There's not much manufacturing now, but just across the border in Shenzhen, many of the factories liaise through Hong Kong to the rest of the world, and vice versa. You still have, great capital markets here. We still have, many of them, all of the major banks of the world who are banking out of here. So it's really like a crossroads of resources and professional experience at a very, very high level, which you really just don't get anywhere else in Asia to this depth and to this breadth. And so I think that, if we believe that, blockchain can be all of these things to all of these people, it's great that Hong Kong has all of these people.
For sure. And moving more to the investing side of things, you mentioned in an interview before that you specialize in ICO investing, right? Investing in what you call the long tail of software and crypto companies, such as, like you brought up before, Bluzelle. So can you explain this concept a little bit and maybe give some examples as well?
Yeah, it's not that we specialize in ICO investing. I want to amend that. I'm not sure where that was from. We specialize in investing in tokens. We also invest in equity, so early stage shares. But we really take a deep look at tokenization, and not just ICOs, but the long tail of the industry, and understanding how do we participate in this economy, in this internet of value, which is denominated in tokens. And how is it different than traditional VC? So there's a lot of factors which differentiate it from traditional VC. Liquidity, time to market, the ability to be able to trade native tokens, regulatory kind of considerations, as well as like deal structuring. And even the overall nascency of the ecosystem itself provides different opportunities versus VC, which is so kind of sophisticated, maybe too much so. In the crypto world, in the token world, you really have the chance to shape, not just participate, but shape the future. So for us, we're not only looking at investing, we're looking at building. And the more that we invest, the more that we realize we actually need to be building. And what that means is supporting great teams, supporting the underlying ecosystem. And that's why community is so important, because a lot of the infrastructure, even the human infrastructure, doesn't fully exist yet. So it's up to us. It's really our responsibility, as well as our potential benefit, to help be part of the solution, to help build the types of structures, communication, resources, and even standards, and in some cases regulation as well. Try to be part of building that ecosystem, because the long tail is massive. If the total addressable market of crypto and blockchain and tokenization is equal to the internet, then this is going to be a very, very long game, and we better kind of settle in and do things the right way.
And in terms of building this ecosystem, like you said, a huge part of it, of course, comes down to technical talent. And for instance, for Ethereum developers, they need to know a specific language called Solidity. And not a lot of people today in this world know that. So how do you go about finding the right talent and sourcing the right talent to build up this ecosystem? Especially, like you said, this is such a nascent stage of the entire ecosystem.
Yeah, I think that talent is a real problem, or a real challenge at the moment. It's seller's market for anybody that even knows what Solidity is, much less has experience kind of coding it. And of course, Solidity is not the only language. There are so many blockchains and so many platforms that are developing now very, very rapidly, who are all in the same boat. They don't have developers. That's why, again, the community aspect is so important, because we need to be part of helping to grow these developers. And not just grow the developers directly, but grow the platforms that will grow developers. That means working with universities. That means working with, freelance economies even. It means, getting out there and, helping the projects, whether we're invested in them or not, helping them to find their audiences and develop their kind of developer resources, all the while where they're actually developing the platform itself. Because, most of these platforms, including Ethereum, are not actually done. So you're trying to, strap on these, educate and strap on these communities to a moving train, which is it's quite challenging. But again, to that end, I think it's just a matter of showing a long-term commitment, being very, kind of principles oriented in terms of the education side of it, really not trying to monetize every, movement you make. It's really about investing for the long term, and education is definitely part of that. We speak a lot to the blockchain at Berkeley folks who are doing amazing things out there. We're also speaking to, and this is also through the Social Alpha, who is, one of whose two kind of focuses is education. We've started to deploy a lot of, we've started to deploy capital to encourage education. So our second grant is actually a teaching grant to bring blockchain at Berkeley educators out to Hong Kong and not only just share information and teach, but also create those networks, create those in-person, face-to-face connections, which we hope will, kind of grow into much more kind of robust relationships and kind of grow over time. So we want to do that more and more and more. But I think that, education is quite important.
Mm-hmm. So with that being said, for the horizons, when it comes to return, it seems like it is a pretty long horizon in that for venture capital investments, you invest in a company and you wait for an average of 6 to 7 years for a possible liquidation event. Whereas for crypto investing, from what you've said so far, it seems like you're really investing from the education stage, the very beginning before products are even built. So the horizons for return might be even longer than that in traditional venture capital. Would you say so?
Well, with us, it's slightly different. We engage on a number of investment strategies. So we have, we invest in shares, and so that 5 to 6 year horizon for traditional VC is the same. But we have a long only token strategy where we're investing in tokens, but we do it recognizing that the core, the underlying asset is liquid. You can't ignore that. Just because there's no reason to treat a token the same way you would treat a share with a 7 year lockup. But at the same time, it's unethical and destructive, to simply invest and then dump all your coins. So we don't do that either. We try to choose something in the middle, where the value the real value of investors, I think, to a startup is obviously not just the money, but it's the long-term commitment. It's the ability to guide the founders. It's the ability to help them build their businesses, find those partnerships, and continue growing over time. Now, that doesn't necessarily mean that you have to just buy and hold until you die. If as a responsible investor, you also need to be able to recycle liquidity so that we can actually invest in other projects and increase our capacity. So my commitment for the companies that we invest in via tokens is that we will hold, the majority of our position in the long term, in that 3 to 5 year period or even longer, and help them grow. Those are the two things that I think are important. Now, there are other projects or other funds who just never sell, and I think that's great for them. For us, I think we have a different approach with our long kind of fund, and I think that's a good thing. And at the same time, we can maintain our commitment to them and be really clear with them about how we see the kind of markets. We also have a separate trading fund, which is just a hedge fund, and all it does is trade back and forth. Now, that has nothing to do with the underlying. It has nothing to do with the company itself, the underlying companies, and they don't really invest with a long bias. They're just trading back and forth, and it's mostly large cap, Bitcoin, Ether, this kind of stuff. So there's different ways to approach it, and I think that what we're trying to do is be an institutional solution and provide different ways for investors to engage with different types of appetite, because the reality is this is what they're going to do anyway. We would just like to be able to do it from in a more responsible way.
Got it. And what you just said actually harkens back to an interview I did with Kyle Samani from Multicoin Capital when he said
All right,
that,
love Kyle.
yeah, the crypto space is a space with venture capital economics with public market liquidity. So you really need people with the technical background to do VC, but also the financial know-how to do kind of hedge fund investing and trading. And I think with that being said, I think this ties pretty well back to our very last question for you. Given that this is a space that requires so much synthesis of different lines of thoughts and different schools of thoughts, what are some maybe books or resources or maybe a piece of advice that helped you out the most when you were first starting out in this space?
Ironically, I think that this kind of technology, blockchain technology, despite its trustlessness, trustless kind of aspects and decentralized nature, like blockchain people love to get together in person. I don't know why, but we do. Meetups are part of like a pillar of blockchain development, and so are conferences. There are so many conferences that it's really impossible to even keep track of them. But blockchain people love to get together, and I think that really is part of the culture and really a part of the learning. There's something about the immediacy of talking to people in person, which I think has really helped the technology to go viral. And I think that if, my suggestion is, yeah, of course, do your reading, keep up with Reddit, read the white papers, but you also have to show up. I think that especially in this early stage, it is as much about who you know and who you meet as it is about, what you know and what you learn. So I think both of these things are quite important. And for everybody who's getting into this space, show up, make yourself useful, provide value before value is asked of you. And that in that way, you can really build a long-term career and kind of position in the space.
For sure. And I think that's a great note to end the interview on. So thank you very much for coming on, Jehan.
Thanks so much for having me, Jason.
And back to our listeners, thank you very much for listening to another episode of The Block Crunch. If you haven't already, please follow me on Twitter at Mr. Jason Choi. That's MrJasonChoi, because I share the latest episodes and updates there. If you haven't, please also rate and subscribe on whatever platform you're listening to this on, because it does help us get this out to more people and help spread the crypto virus. Once again, I've been your host, Jason Choi, and I look forward to seeing you at our next episode.